Today we are going to talk about the coronavirus and how it is affecting the FinTech industry, which is very exciting. This was quite a pleasure to prepare for. What we're going to run through today is the introduction, industry impact, social scan as well. So we're going to have a listen in on social media and see what the internet is saying about this crisis in the context of financial technology. We're going to go through key challenges faced by the industry, the tactical response as well. So how can FinTech companies respond rapidly? And then we're going to talk about how they can thrive as well, and what are some strategies that you can apply. So quite exciting. To introduce myself, for those that don't know me, my name is Robin Leonard. I'm the CEO and co-founder of AFDigital, 6-time Salesforce certified, and I'm currently working on my non-profit cloud consultant cert, which is hopefully next up. But yeah, always on a learning journey. My background prior to doing this business, I worked for IBM as a BA, and then prior to that, Vodafone, also as a BA. Shout out to all the BAs out there. My interest, the future, business transformation, and skateboarding, mostly watching these days. If you want to follow me on social, Robin_AFD on Twitter or Instagram. Great, and AFDigital, for those that don't know the company, we're a Salesforce Gold Consulting Partner. We're a Salesforce.org registered partner, which is the non-profit arm and education arm of Salesforce. We're also a multi-cloud Salesforce partner, which makes us a little bit unique because we can work across sales, service, community, and marketing cloud. Our value prop is really to provide advisory, consulting, to make sure that you're going on the right track. We also help with transformation projects, so you can rapidly implement that technology and get value from it. And then we have a managed service program that we call Team X, short for Team Extension, which is hybrid managed service between marketing and technology. AFDigital are also on the Salesforce Partner Advisory Board for Marketing Cloud. So we meet once a year in the US and provide feedback on the product, get an insight onto the future. We sit on the board with really amazing partners like Accenture, Deloitte, Publicis, so it's quite the honor. And yeah, we really work across industry. So this is really, it kind of gives us a good view of the world so that we can apply cross-industry use cases. Great, so without further ado, let's talk about the industry impact on financial technology. So this was probably the hardest part of actually doing this webinar or preparing for it, was I had to define what is FinTech again. Like, it's kind of, we think we know what it is, but what is it? So this is what I believe, or what I determined it to be in my research, but I'm also open to feedback and suggestions. There's so many different like types of FinTech or understandings of it. And you could almost say that anything with money and technology is FinTech. So that's why it's kind of broad, because almost everything nowadays has some kind of technology and financial stuff. I think what it isn't is traditional financial services firms. So that's kind of a good way of looking at it. I've got a robot on the right, or this guy dancing. And the reason is because it's very much, this is a new thing, like these are all new concepts. It's all the disruption from the financial industry. So what have we got? Challenger neobanks. So for those who don't know, these are like a new form of banks that are more online and have less of those traditional organizational things like people and banks. So they're more likely to be online only and have self-service and, you know, not require you to go into a bank to do anything. Digital lenders. So these are lending organizations that make it a lot easier to borrow, whether they're business finance or microfinance. There's heaps of different digital lending products out there, and many to be wary of. Robo advisory. So this is really kind of taking the place of advisors, financial consultants, investment firms. There's just so many situations where you can actually implement robots into your process, do it more efficiently. And we're going to talk about this in a bit. Capital markets, the traditional capital markets where people buy stocks and sell stocks or buy and sell bonds, these are also digital technology driven things as well. So there's FinTech all through this. Mobile payments, and really payments in general. There's a lot of financial technology in here. We're going to talk about how that's shifting at the moment. InsureTech, don't know if I like that, how that word is, but InsureTech is a whole industry in its own, and insurance is a whole industry in its own. Bringing insurance into FinTech, it complicates things because it's this whole industry on its own. It's got its own lingo. You could do definitely a whole topic on insurance alone, but it is technically part of FinTech. Crypto, I won't explain what that is. I think everyone's aware. And then finally, crowdfunding as well is another FinTech that you can kind of consider one of the major ones. So there's about 7 of these guys. Let's walk through. So before we kind of go into the FinTech, I just want to step back a little bit and talk through what's going on. So half the world's money has gone. So there's this interesting article. If you look at the proportion of the global economy is now affected, it is probably around 50% of global GDP. So it's just insane. Half of the world's money is gone. And you've got mortgage defaulting. Like, this is an economic crisis that we've never seen before. And if you look back, I don't know if you remember 3-4 months ago, there's been talk about a global recession coming anyway. Like, there's kind of like everyone's been talking about it for a little while. So now this has happened. Coronavirus happened maybe at a time where we had a few bubbles. So I think that's really what we should be concerned about. There's a massive rise in unemployment. If you look at this graph on the top left, Goldman Sachs, so you've got the unemployment throughout the years. Back in 1980, you can see this little spike of unemployment. That was the highest it's been since 2010, which was after GFC. And now we've got this number up here, which is like, it dwarfs the historical unemployment numbers. Yeah, so that's quite astounding. On the right, US jobless claims at record highs. So you've kind of got them sitting here. This is in millions. And then suddenly it's like up to 6.6 million. It's just insane. And these are weeks, 6.6 million in a week. March jobs, 1 month net change. Yeah, so this is showing where the jobs are being lost. Leisure and hospitality, healthcare, social assistance, professional business services. Financial activity is actually not that much job loss there yet. So, which is probably a little good ray of sunshine. Worse than the GFC. So it's technically, like, statistically, and this is the FTSE rate of change on a week-by-week basis. So if you look, it's like, if it's got a really high rate of change, that's a dramatic spike is what it means. So, and we can see here, it's really, we're already past financial crisis, just over. And really all capital markets have plummeted. And it's changing everything. It's changing our perception of value. You've got these senators that are doing funny business here, pulling their stocks out. Is that insider trading? I don't know, but it's kind of sketchy. So all of these major things are happening. All stock markets, and it's a global phenomena. And this is probably the one thing that's unprecedented, is it's happening all around the world at the same time, to varying degrees, but all around the world. Other financial crises have been less global. Like, obviously GFC has a G in it, but it was like, it was global. But this is like global, if I can re-emphasize how global it is. Global production has halted. Chinese industrial production fell by 13.5% in the first 2 months of the year. So and I don't know the exact, oh, actually I have it here. 13.45% of global exports come from China. So it's one in every 10, more than one in every 10 products is made in China. And the production of those products is just kind of just fell through the bottom of the floor. So this is really interesting. You know, it's kind of like if the world had a factory, it would be China. That would be a largest producer. And now that that's stopped operating or stopped producing, because obviously it doesn't want to overproduce either, we are going to have a deficit in supply in the markets. For organizations, it's make or break time, really, this whole coronavirus thing. You've got on the left here, the Moody ratings. So the Moody ratings rate the credit worthiness of an organization or a country. I think it is countries as well. So that's like the AAA type ratings. So airlines, cruise, oil, all of those firms are getting re-rated now. Because Moody's like, wait, guys, you may not be as creditworthy as you used to be. So this line of credit is essential for a lot of organizations to operate when they have, you know, like they really depend on that cash flow. ANZ, CommBank, NAB, Westpac responding to the March RBA rate cut. So they've made the government has announced a rate cut of 0.25%. This is on home loans or on loans, lending, I guess. It's because of the official interest rate changing, and I'm not an economist, but my understanding of this is that the government takes these measures to try and control inflation. Because if we all remember our economics, there's all of these different factors that come into play as these things happen, and the official cash rate is one of the measures or the controls of that the government has to ensure that inflation doesn't get out of control, which it does get out of control in wartime situations. All right, so that's kind of our situation. Let's jump into FinTech and observe some of the things that are going on across these different areas. So we've got neobanks. So they're really, right now, neobanks are flying by the seat of their pants. So they are like, they're little organizations, right? As opposed to large organizations like old banks. So these guys don't have large customer service teams. There's kind of, it's going to be very hard for them to deliver service at scale in a competitive way to large organizations that have all of those resources. So it's kind of like little nuances of this industry. The low rates, so the OCR, the official cash rate by the government, those kind of change the whole profitability model of neobanks. Neobanks depend on acquisition of large numbers, and I think my understanding is that's the strategy, similar to an Uber or a Twitter. They're like, let's get lots of users on, and you know that's going to be great, but they don't necessarily have a lot of profitability per user. And if anything, they may be acquiring them at a cost. So that's the thing to consider, is that the business model of those neobanks, if put under financial strain, is a shaky one. That's why they're holding on by the seat of their pants. Yeah, the whole market valuation as well. Although it's hard to say if it's going to benefit it or damage it. I think there's near-term fear, but long-term it's actually going to really benefit these neobanks. And you can see this here, that even in a time of crisis, there's massive investment in neobanking. SME Challenger Bank Judo is likely to downsize its $400 million capital raising to a range of 250 to 400 amid shrinking demand for credit. So these guys are impacted, but they're impacted in raising funds that they'll probably get. This other neobank, Zinger, I don't know if I'm saying that correctly, they just got an investment. When was this? This was March 24th, 2020. These guys are all aware of the corona's happened then. Like this has happened just recently. That's almost $500 million. Another one, 86400, gets $34 million cash investment, targets $2 billion in mortgage book. So these guys, when was this? April 8th. That was just a few days ago. These guys are the ones that are getting the money at the moment. This kind of industry is receiving funds at the moment to grow. And that's, I think, the key takeaway from neobanks is they're really hanging in there, but if they're the right answer. So mortgages, if we look at mortgages, you've just naturally, people are losing their jobs, they won't be able to service their mortgages. The banks, yeah, it's gonna affect everything. The whole mortgage process as well, getting a mortgage is gonna be a little bit harder as well, because you can't go into banks and do all the typical stuff that you used to do with traditional banking models. So everything's going to change. Like paying your mortgage is going to be, it is difficult now because we're all struggling. Getting a new mortgage is also going to be difficult unless there's a new way of doing it. Like how are we going to buy houses in the future? So it's really a situation of survival of the fittest. And this is really where liquidity is so important. You know, there's a lot of startups in financial tech, and really for them, it's being having that liquidity, being a lender, and just understanding where your cash is coming and going. It's yeah, I think this is going to be the biggest challenge. But if organizations, these new modern organizations, can just stay alive, then they're really in it for something amazing. So another angle is investment problems. So if I am an investment firm, I'm like a stockbroking firm, I'm a fund management firm. What I do for my clients is I pick like my best strategy, and I'm responsible for their money. And I've got this big fund that is strategically invested to produce a repeatable outcome, or a dividend back. So that's the thing, is my portfolio tied to this firm is kind of like, it believes in market kind of stability and general growth, or it assumes that's going to happen. It doesn't consider coronavirus. So there's fund managers. What do when they have the situation? What should they do? Should they act irrationally and do crazy things? Should they consider wearing it out? And so you can see in this article, this is the advice: we can't predict the exact spread of an epidemic or what the economic effects can be. Past outbreaks have affected the markets, but they have recovered. It's tough to predict when to get out of and back in the market, so it's best to hang tight. Yeah, so that three things say we just don't know anything, so do nothing. That's what this says. If you read that, it says we don't know anything, so do nothing. Which is that's a human approach, and I mean, like, it's good advice. Like, you shouldn't be irrational, but that's the problem with being a human, is we don't know enough to make these decisions. Yeah, so you've got these private fund managers that are actually in a bit of a pickle at the moment. But if we think about the future and we think about robo-advisors, and robo-advisors have been around for a little while now. And so for those that don't know, robo-advisors, it's really in so many use cases, but these are algorithms that take insights from large data sets and apply learning algorithms and all sorts of things to make recommendations on what could be a good thing to do. So I think it's pretty straightforward. Like, it just helps us decide better, and we can also automate our decision making, so it's programmatic, so we can execute those decisions automatically. And if you think about a robo advisor, so while a human-led fund management firm is like, oh, let's mitigate risk by not being careless, a robo advisor will be like, hey, did you know that electric robot vacuum cleaners are just skyrocketing at the moment? Like, that's just one very specific product that's skyrocketing. And a robo advisor will be able to pick that and go, oh, yep, you should invest this much in here, done, take care of it automatically for you. And then when it gets to what it thinks is the peak based on hundreds of years, I don't know, 100-year of like stock trading data, it picks when the best time to sell is statistically based on all of the known information. And it does that at scale. It doesn't do that once or twice or 3 times a day. It does that thousands of times a day, hundreds of thousands of times a day. It's making that calculation. It's unlimited how often it can do that. It's a fully scalable fund trading. Like, I can zoom into the smallest thing and make the smallest trade to make your money more useful. So that's the thing, is this time it's going to prove robo traders, robo advisors, and hopefully for the better. I mean, maybe it won't work, but my bet is on robo advice. I think they've got the answer. I think the old days of giving it to a fund manager where he makes these based on his, like, a bit of gut feeling and a bit of his 30 years in the industry, it doesn't mean anything now, because all of these companies are getting flipped on their head. These old organizations are not rated as credible as they used to be, and these young organizations are much higher value potential. New York Stock Exchange. So if we look at the capital markets, New York Stock Exchange is actually currently electronically run. They've closed most stock exchange, I think, around the world physically, and they're all already running. Like, there wasn't really an issue with doing this. So you've got to consider that it's already very automated, this process. If you can imagine that 20% of all trades are done by humans, but 80% are done automatically by systems. It actually, it's quite mind-blowing. Like, I don't know how much, like, it's $30 trillion or something like that goes through New York Stock Exchange. Okay, so moving into payments. So contactless payments is a very interesting area. And it's now not just a convenience, it's now a responsibility. So as an organization that is asking customers to pay, I shouldn't force them to touch anything of mine. It sounds crazy, but it's true. So you've got to think about them not touching your anything when they're paying, checking out, all of that stuff. So now it's a matter of customer safety. And you can see it's on the rise globally anyway. 2013, Australia leading the way. But yeah, you can kind of see that all countries are picking up anyway, like it's the future. So now this coronavirus that's a really great example of rapid technological disruption caused by coronavirus. It was already going there, but now it's going to escalate because it becomes mandatory. Also cashless as well. I mean, it's kind of tied to contactless, but cashless is also relevant for customer safety. And that's the thing, you've just got to imagine how much coronavirus there is on dollar notes. I don't know if it sticks. Also thinking about no contact delivery as well. So how can you deliver goods without, yeah. Okay, and old people, let's not forget the old people. The old people, they used to love going down and seeing Sam at the local bank and having a chat, and that was how they felt really connected, and that was their bank. They were on a first name basis with their bank manager who they've known and helped them buy their first home. It's very personal. And now we don't have that. We can't do that. It's stopped. So we've got to consider the generation of people that aren't so tech savvy. They don't necessarily have the knowledge or awareness of how to do stuff online. So I think this is an opportunity, but it's also a pain point. And it's really becoming the new normal, online self-service. So it's just kind of a thing that everyone's got to start doing now. Even before coronavirus hit, retail bank branches were disappearing at a rapid clip. So we've been on this path that's just accelerating. If we look at Meralco, our amazing customer, they launched an online system a couple of years back. Full online, pay your bills online. They're a big energy company in the Philippines, servicing like millions of people. So for them now, this is a time that it all made sense. They were prepared, and now it's becoming relevant. So this is it's really amazing to see this transformation. And you'll see generally all organizations will have to invest in financial technology. Companies will have to set up payment gateways and ways of their customers to interact with them financially. You can see here Chinese banks taking proactive measures, no contact banking. So they've got a few examples here. Live stream marketing. This one had a smart community platform, which is a login portal for their customers. That's what they launched in response to COVID-19. CMB launched anti-epidemic zone in its app. So you can see here, this is really the future. It's now. And we're forced to do it now. What you will see is these large organizations that are investing in looking like neobanks. And that's probably what neobanks have to be most worried about, is what the large companies are going to release. Insurance. So a really good question is, do insurance have this covered? I think we're all a little bit worried, right? Like, what if I get sick? Who's going to pay my hospital bills? What if I die? Will my life insurance be covered? What if I was stuck overseas? Will my travel insurance be covered? What if my insurance company can't afford to pay all of us? What about business insurance? So there's all these kind of questions. And reading this article by Laura J. Hay from KPMG, she's a very intelligent woman, she articulated that it's really the reinsurers that are at risk. And there is actually a big risk in the events industry, like the Olympics, right? That's cancelled. Someone's got to pay. Business insurers, also for lost revenue. That is potentially going to be a big impact to the insurance industry. And life insurance is another one that's big. So this is maybe the biggest exposure for the industry, is that life insurance from the deaths, but it's also not potentially not the end of the world either. It's just probably the impact, is there are some payouts. And it's largely uncharted as well. So, and this is really where there are issues. This is in the kind of the next steps, like what do we do next? There's situations where insurance companies may not cover coronavirus related things. There was also, I think after SARS, a lot of insurance companies added epidemic wording into their terms and conditions. So this is really going to test a lot, like, yeah, either the insurance companies or the receiver. There's also downstream impact to insurance agents on their commissions payments if the premiums aren't being paid. So you know, there's a whole ecosystem of people in the insurance industry. Blockchain, and this is really interesting. Blockchain, if you, I don't know if you've heard of it, people are talking about an immunity passport, which is like a blockchain tracking so that I can know if I'm safe or not. It's like a new identity, like a new global unique identifier maybe. So very interesting. This is using the blockchain technology to achieve that. And the reason this is important is because InsurTech companies can use this data to provide personalized insurance. So now that immunity is all the rage, I guess. Cryptocurrency generally is up and down. So charities are seeing a really good value in crypto. A lot of charities around the world are opening their payment channels up so they can accept cryptocurrency. And the whole logic with this is, I think there's a lot of people with crypto that can't use it or something. So it's actually really great. Like if they can use it and benefit from it, then why not? So this actually could be a future major payment channel. There are some impacts to the crypto industry, like Bitfarms. I think it's exposing a few things that probably weren't working already, and now it's just making them a little bit more fragile. But overall, blockchain was pretty much on the rise from what I could see. There's increases in exchange traffic. Yeah, it's just increasing. For me, I think if I were to throw an opinion out there that's probably not well researched, is I would assume that most countries would face an inflation situation. And for the first time, maybe crypto would be perceived as a more stable currency than a nation's currency. So I'm just going to throw that out there. It's a hypothesis. If anyone wants to do some research, I'd be interested to hear. So with all of this new stuff, like we've got to go online, we've got to get old people to go online, like all of these things comes a lot of risk. Crypto itself is at risk. There's scammers all over the show, I think, jumping on the bandwagon. But generally, it is dangerous. You know, we've had to rapidly scale access to non-critical domains for employees, right? So we've got to give them access to data that they wouldn't have had before so they can do their jobs remotely, exposing for the first time critical and sensitive systems to known risks over open networks. So you're on your laptop at home, you've got sensitive customer data, you've got your, like, I don't know, sister in the next room and dog, and it's dangerous. You know, anyone could take that from your house. You know, it's not protected like it was in an office where you have security guards and cameras and, you know, that kind of protection. So it's a whole new area. And excuse me, this is loading. And so the whole thing is, I don't know why that just stopped. So the whole thing is really data breach. We've got to consider the risk of data breach and how that is affecting everything. Oh, there we go. Thank you. I think my laptop has COVID-19. So bear with me a second, I'll load this up. Yeah, so this whole data breach thing, it on average costs Australian businesses, it's $2.61, I believe, per record lost. There's a massive financial implication in a data breach. And now that we're more exposed, I don't think there's going to be any leniency for it. Okay, here we are. You know, it's not like if something happens, the person that is you know, like that has their data breached, they're not going to care any less because of COVID-19, because your employee had to work from home. They're going to be like, how dare you allow that to happen? So it's really amazing. Yeah, so 2017 average costs in millions, 2.51 million to the average company. And the more data you have, the more impact. So the way it scales is it scales by data records. So if you have, say, 10,000 people in your contact database and you have a malicious attack, it's 154 times 10,000 people. That's what the cost is. So, I mean, do the math. It's pretty hectic. If you look at financial as a top industry, 232 is the average per capita cost by industry. So that's the thing. This is the same number, 232. So it's actually, if you have 10,000 times 232 and your financial services, this is your cost. So this is big money, big serious business. There's increased cyber crime, increased risk. Yeah, I mean, I don't need to tell you. You need to take it very seriously. Blockchain, interestingly, while it's a crypto technology, like, I mean, it's kind of used initially for crypto, like for currency. Now it's really going to be used for a lot of other use cases, like your supply chain. How do I know that my supply chain is really, it's sustainable? You know, how do I know it's safe, financially safe all the way through? How do I know where everything's coming from? And that's really where this whole shake-up in supply chain is actually an opportunity for the industry to reimagine supply chain and tracking all the way through it using blockchain as a technology. Crowdfunding, tech, helping the fight against COVID-19. So crowdfunding is really, there's so much demand for it because it's an easy way for people to raise funds. You can see here, it's a very common situation where they just do a small thing to help out a local something. You know, it's like, let's just help them with what they need, raise some funds. Otherwise, how will they work together? They're all sitting at home. How are they going to gather cash? That's not even possible. It's not even safe to have cash. They have to do this. Just Giving, we're raising £50,000 to provide better PPE to our NHS doctors. There you go. They've already got 33%. That's great. So really cool. 322 supporters. This is a really great use case for financial technology. Okay, great. So we're ready for, this is a bit of a wrap on the ecosystem. And This is really delving into what's going on from a cash flow perspective across all of the different stakeholder groups. So as usual, we've got the customer in the middle, and the customer she's not looking too happy. She's kind of lost a job. Oh, sorry, we're not there yet. She's just her. Sorry, I haven't got to the crisis yet. This is our normal situation. So typically works with the bank normally. Mortgages, lending, deposits, all of those things works with them. She may also have digital lending, but maybe or maybe not. That's why it's a dotted line. It's like it's there, but hasn't really caught on. Neobanking as well. Like she's got a friend or two on it, but she's like, I still prefer my big bank. So that's her relationship. Often these digital lenders and neobanks will use the infrastructure of the banks anyway. So it's kind of the same banana, but they're just providing, better services really, or more modern services. We've also got the government sitting here who's doing general inflation control with the OCR, and that's kind of a normal thing. The reason it's green is because it's normal, it's healthy-ish. We've got this person, this customer who is also paying her tax money like a good citizen. So that's the flow of cash, and she's kind of, these guys are getting a little bit of cash, but generally that money's going down to the financial institution. If we look to the left, we've got retailers. So she's spending money. She's spending money at shops. She's getting new clothes. She's also using online payments. So this is really kind of the relationship is the retail drives the online payments, and then it also pays for the supply chain behind it. So that's kind of on the retail side. And then on the insurance side, because remember, we've got a few different aspects that we have to talk about. And this is the thing about FinTech is it's really across everything. And, somebody else could look at this and be like, wait, you forgot a whole type of business. And I probably have. So we've got InsurTech and insurance companies. The reason I've grouped them together in these cases is because they're like the same business type, but it's a different business model. So a typical insurance company, a big old insurance company with lots of staff versus an InsurTech company, which is maybe more like a startup that can provide really smart insurance options. And then you've got reinsurers as well. And reinsurers, my understanding is they kind of, provide the backbone of insurance to insurance companies. On the right side, we've got robo advisors. We've got the investment side. So this is the people you give your money to invest it. The investment firms and the robo advisors, I've grouped them together. But generally, she gives most of her money to the investment firms. It hasn't really caught on yet with the robo advisors. And then shifting down, she may also have some stocks that she's trading. And so she plays in the capital market. She's done this since she was 21. Her dad helped her get set up. It is what it is. She's got a few stocks that she's had for a while. Yeah, that's kind of how she works. She hasn't really got into crypto, but she's got some mates on crypto. And naturally also the capital markets as well. They also have business tax that feeds the government. So this is the ecosystem as of 3 months ago. This is how people worked. We're about to see her frown not change. She's equally unhappy at this current state. So there's a lot going on here. So I'm going to try whip through it. The red is the unhappy, and the green is the okay. It's like there's some positive signs here. So okay, let's go down first. So this woman has lost her job, hence why she's so unhappy. She can't pay her mortgage and any of her loans she's really struggling with. So that's kind of hitting the bank. What she is doing though is she may be exploring alternative lending products because she does need a loan, like she needs cash so bad. And these alternative lenders, they can be a little bit more pragmatic with their lending. So she may seek alternatives, and also in the banking situation, because she's got this relationship with a bank that's an old-fashioned relationship, contractually tied up into this mortgage. She's going to struggle to do anything else with the bank while she's got problems. So she may seek alternatives that are more flexible with her situation. So that's why these guys are green. This is red. And then in between, you've also got, I mean, there's a bit of tension in the sense that these lenders, they have to stay liquid. We've talked about that. So they've got to manage that. Also, there's lower interest rates as well. And this is because of the inflation control that's squeezed in by the government, where they say lower the OCR. I'm not an economist, by the way. I may not get this quite right. And so that's the thing, is there's this kind of natural pressure. The government's paying a basic income to this woman who's lost her job, and we may see this become a universal basic income one day. But for the time being, the government's supporting us if we've lost our job. Government's also paying bailouts to these capital markets, where large organizations that are really important have, you know, going out of business potentially. So there's also case-by-case bailouts. Okay, so I'll go around to the left. Retailers spending less because I don't have so much money. So retailers are getting less money, supply chain behind that getting less money. I've got a whole webinar on retail, which goes into that in detail. The good thing, the shining light is online payments are strong because they're very required. For the minimal spending required, 100% of it goes through online payments. So that's amazing. For that one little area. Then if we go up to the top, we've got insurance. So our insurance companies, they have to pay out these big claims. So that's the problem there. InsurTech, if they've got insurance policies with InsurTech companies, there's also some claims to pay out. So no one's really going to hide away from those claims. If I'm an insurance company, I've got to pay out. But where it may have been a bit, as a customer, I probably don't spend a lot with InsurTech companies. Now I'm going to start looking for smarter insurance options, same as banking, because now, I mean, maybe I'll be very loyal, but now all my premiums are going to go up. Yeah, I don't even know, but it may be that I'll search for other options. You've also got the reinsurers behind the scenes that are maybe under strain with the number of claims. So these guys may be in trouble. On the right side, we've got our investment firms. So the investment firm that we've currently got our stocks in, she may choose to sell them. She may go, oh, this is too risky. Let me get out, get my money. I need my cash. I've got to pay my get my cash so I can pay for other bills. So she's selling up, and this investment firm is selling, and it's not so happy for them. What they may start looking at is smart investments, where they can invest a small amount and have a robot use it very efficiently, rather than, you know, having one big amount with one fund manager. So this may open up new investment thinking. We've all seen that right now is actually a really good time to invest. So quite interesting. Okay, and then also down in capital markets, so selling out of capital markets. So if I've got stocks directly invested, I may sell them, weakens everything, forces more bailouts, it's all impacted. But I may explore new currencies, because crypto, as I said before, may hold value where national currencies may be weak. So that's a very interesting future concept. Great. Okay, let's just jump very quickly into Social Studio. And I will show you quickly what's being said about the financial services industry. The interesting thing is I actually used Social Studio to prepare all of this research. It was actually off the trend analysis around this that I was able to do this whole webinar. Okay, great. Okay, great. So this is Social Studio. Social Studio, for those that don't know, is an all-you-can-eat social media management platform by Salesforce. It's got publishing, it's got engagement, it's got analytics. So those are kind of your major things that you need to do. What I'm going to focus on is really just the analytics portion. We're just going to look at the social listening. So this is really around financial technology specific. And this is so useful actually in terms of just getting the views, getting those little detailed insights about each of those subcategories of FinTech. So in the last 30 days, there were 44,000 posts on FinTech. You can see here it's largely positive. If we look at the keywords that are used, FinTech, hashtag FinTech. So these are all social media posts that are said with FinTech keywords and COVID-19 related keywords. So this really allows us to see what the conversation is around the FinTech topic with coronavirus. So there's things like CEO, what this means. So we can drill in and kind of get a good feel for what's being said around each of these things. CEO for conversations on future of FinTech. I think it's just a really bubbling spot. CEO of DPO Group discussed how regional FinTech trends have been impacted. Oops. Joe Selesky for an interactive webinar. Yes, there's a lot going on. So that's clearly being talked about by CEOs. FinTech is a very active topic. 7.7 billion people in the world. Interesting. Number of people using social media platforms from 2004 to 2019, Facebook, YouTube. Very interesting. So it's a really good way to understand what's going on. You can see words like blockchain here, innovation, startups. You can almost just follow things like this and get a good view of what the innovation is. Hashtag AI. It's very interesting. FinTech startups smell opportunity, revisit business ideas. Yeah, so unlike other industries, FinTech is probably going to do pretty well out of Corona, I would say. If we look at what some of these topics are, this shows a grouping of different topics. Let me zoom in on this. So what I've done is I've listened in for specific topics within the COVID-19. So blockchain, out of all conversations around coronavirus and FinTech, blockchain is the most commonly talked about, which is very interesting. I think blockchain is going to have a bit of a revolution out of this. Crowdfunding is second, 11.8%. And there were so many examples of people using crowdfunding platforms. I think that's, if you had a crowdfunding platform before, you'll be in a great position now to leverage it because it's all about distributed wealth. So what's this one? Brown for FinTech. Okay, that's just general FinTech. INSURTECH is in pink. So that's 1.4% of all of the conversations around FinTech. Online banking, contactless payments, and mobile payments. Yeah, so very interesting. That's the breakdown of those conversations. And when we look at these, we can also look at where they're happening as well. So, at kind of how they're happening over time. And we can zoom in on these things and really pick out the spikes. So this is actually the blockchain conversation over the last 30 days, the orange. And you can see if we take away blockchain, this is the rest. So then we've got crowdfunding, we've got a few spikes, and we can zoom in on those spikes. There's a little spike down here for this yellow one is payments, mobile payments. Just have a look at that. So yeah, it's very interesting. And you can, as you take out the noise, you can start to zoom in. Yeah, so this is the spike around mobile payments on 8th of April. Twitter CEO and co-founder Jack Dorsey announced he's giving $1 billion from his equity in the mobile payment platform he founded, Square. Good on him. If we take away payments, what are we left with? This is payments. So that was mobile payments before. InsurTech, online banking. So you can see here is a steady string of online banking conversations. Great. So jumping out of that, if we look at where those conversations are happening, it's largely US, UK, India, Germany, Italy, France. Yeah, very interesting. I think what will be interesting is seeing how the emerging markets also leverage FinTech, because there are in many ways countries like Nigeria are already leading the way in terms of how they leverage FinTech. Great. So that is that. I'm going to jump out of Social Studio. If there's something that you'd like to see in there next time, please raise a question and I'd be happy to cover it. So let's cover this off. Our key challenges, if we were to summarize for the FinTech industry, we've got global depression. So the customers don't have money, everyone's sad, no one has jobs, all of the worst case scenarios, worse than the GFC. Number one, I think that affects everyone because it just stops the flow of cash. Number two, consumer debt repayments. So if you're part of this loop, then you're also downstream of the global depression and you're owed money. Survival of the fittest. So whether you're a large organization or a small organization, your ability to survive the coronavirus is going to determine everything, literally. I mean, it's black and white, literally. For inflation, inflation is potentially going to change everything. It changes the value of everything, changes everything. So this one is a big one in FinTech. Urgency of tech change as well. So it's really, now that these things are forced, like contactless payments, it's really the urgency around how quickly we can get up to speed is going to be how we're going to survive, right? If we can't get up to speed quickly, we won't survive. 6, old people adoption. Not adopting old people, I'm talking about old people adoption of financial technology. So this is probably a big opportunity as well to simplify this technology and really make it available to these old people in a way they can consume it. And finally, data security probably should be a bit higher in the list, but data security is also a really big challenge that faces your industry, given that you are the highest cost for a data breach out of all industries, financial services. So our tactical response to this. So I've got a bit of a methodology for how I do this response recommendation for each industry. And it's very simple. It's respond, adapt, and thrive. So obviously respond is what do you do first, what's urgent. Adapt is what do I need to do to keep the doors open in the near future. And then thrive is how am I going to really flip my business model and come out of this really running and making heaps of cash. So if you also break this down, it's really tactical and strategic. Respond and adapt is a tactical approach, and that's what we need to focus on right now. Strategic is really what's the future of our industry. We should all be asking ourselves that. And very simply, this is my methodology. So I've taken the 7 top challenges and run it across each of these areas, respond, adapt, thrive, and given a bit of a recommendation. Like it's not rocket science, but it's maybe just going to help trigger some thinking around some ideas. And keep in mind, FinTech is very broad, so it's very hard to give any one specific recommendation. So hopefully this will be a good way of ideation, if that makes sense. So respond, global depression, empathy and communication, always. Like people are going through hard times, it's emotional. Reduce costs, seek aid, extend runway as a business. 2, consumer debt repayment, empathy and communication, again, seek aid, help customers seek aid. This is probably the biggest one that you can really make an impact, is you can help your customers seek aid and help them so that they are better. Then they can repay your debts. You know, don't be dicks. I shouldn't say that. Survival of the fittest. Runway is a metric. So make runway a metric. Say, how many months have I got until I have to shut down? That's your new metric that you're basing all of your business decisions off. Inflation. Mitigate currency exposure. So you just have to be aware of which countries you're trading in and how your currency relationships work. If you're buying in a country that has got a volatile currency and you're selling into a country that has a strong currency, you should be okay. But vice versa, you've got to consider for your organization, your business model, what the currencies are doing, because they're all going to do something quite unique. Urgency of tech change. So stop any non-core investment immediately. Stop anything that is not the future. Just stop it. It's a waste of money. 6, old people adoption. Communicate with them. Start by just communicating. Like, have a direct conversation with your older customers. Make sure they have a specific support network. 7, data security. So get your business continuity plan up to speed. I'm sure it is by now. It must be by this stage in the crisis. Data security policy to prevent a data breach, and then audit your tech stack would be my advice. So moving into adapt. In terms of the depression, focus on relevant products. So you sell what's really relevant to the customer. Pragmatic repayment. So just think of new ideas of how customers can repay. Survival of the fittest. So again, runway. Inflation is to take care of your margins in the context of currency. You know, like a lot of companies don't see it changing so much, so it's not really a big figure they really are concerned about, but it needs to be managed. Urgency, so use Pareto 80-20 rule and prioritize what you need to do first and then iterate would be my advice. Old people adoption, tailor and educate. So tailor your things for them and then educate them, like proactively. Data security, so now that you've kind of understood your tech stack and your risks, now is the time to start your journey in investing in secure cloud technology. So in terms of how to thrive, find new revenue streams, modernize debt consolidation. So there's an opportunity there. Survival of the fittest is really doubling down on the future business model. Like, do the future, don't do the past. It's very obvious. Explore cryptocurrency and what this means to your organization, because it may be another way of managing inflation. Urgency of tech change. So really you need to move into a 100% self-service model immediately. That's really the goal. Have new products for old people, specific products, specific everything for people that are old, make it like they need it. And then data security, make this your unique selling proposition. Like, the reason they choose you is because you're secure. So it's really something to market potentially. So this is a wake-up call. Out with the old, in with the new normal. As people, we need to assess what we need to change. It is a massive opportunity if we grab it. Bain & Company did a study in the last financial crisis, the GFC, and companies either come out as a winner or a loser. So it's really about determining where you are. And I'd encourage, it's really in your tech stack that you take the big approach now. It's really removing your data silos. So this is an example of a tech stack for a trading company that has a lot of data silos. And so what we can do with technology like Salesforce is securely put it into one place where people access it, and also allow your customers to communicate with you through multiple channels, keeping all of that data in the one place safely. It also allows you to do things like automate your journeys, marketing automation. It really allows you to sell while you sleep. Great. Okay, so I'm running out of time, but if you hadn't noticed, there is a Salesforce care package where they're providing free Social Studio for 3 months for businesses that are impacted by coronavirus. AFDigital does have a free package where we can help you get set up with that. If you qualify, there's a few conditions attached. But yeah, please do reach out to contact@afdigital.com if this is you. Yeah, and finally, just to reiterate, really think through your steps as FinTech. I think while you've got respond and adapt, those you have to take them very seriously. I think the focus should really be thriving, especially in FinTech. It's such a great industry. Well, thank you very much. Have a great day, everyone.